Hello and welcome. Today's topic is building businesses through early stage investing. I'm Neela Molgard with Launch Minnesota, an initiative of the Minnesota Department of Employment and Economic Development. This initiative has been in existence for slightly under 2 years with the goal to accelerate startups and grow Minnesota's innovation ecosystem by bringing together higher ed and investors like you, our private sector, our entrepreneurial support orgs, co-working spaces, all to focus on our entrepreneurs and our innovators and our startups. We really focus on 3 key goals. 1, increasing access to capital through our grants, through our angel tax credit, which hopefully many of you are already aware of, but we'll provide more details in the chat later. And working with investors. We also are creating a collaborative culture, helping our entrepreneurs navigate the tremendous resources across Minnesota. And we're growing talent and expertise for our startups so they can be more successful. 2020 was a record year. We raised $2.3 billion total in venture capital. We were number 10 nationally in total capital raised and number 1 in the Midwest. It was a record year, but there's still a lot of work to be done. I've also seen firsthand the benefit when we infuse capital into a community. It supports the launch of new technologies, it attracts talent, and it really grows businesses. In my conversations with individuals across the state, it is consistent that there is a need and a desire to increase the number of investors that are engaged and the number of investments being made to our innovators and to our startups. So today, we are bringing together talent and expertise from corner to corner of the state to help address this issue and help provide some knowledge and expertise on this in the hopes of increasing the capacity and impact across the state. So I want to thank Groov Capital for being part of this dialogue and partnership in putting this event together, and our incredible panelists. And I'm going to pass it over to Michaela with Groov Capital as she moderates the remainder of the discussion. Michaela?
Perfect. Thank you so much, Neela. Lined up and a great group of panelists. We will be focusing the discussion on kind of 3 main areas. We'll be starting off with just in general, what exactly is early stage investing and angel investing. We'll move into discussing that impact it has on startups and our communities. And then most importantly, we will also be discussing ways in which you can get engaged. Before we dive in, a few just general housekeeping items to be aware of. We will be monitoring the chat features. So if at any point you have questions, feel free to drop those in the chat. And because I know we're on Microsoft Teams, to make sure everyone knows where to get to that chat, if you could just put a little note where you're calling in. That would be really helpful for us to kind of see where everyone's at. So feel free to go ahead and do that now. And then 2 other kind of housekeeping items. First and foremost, this is for education purposes. It should not be considered individual investment advice. We obviously don't know what your situation is to be able to do that. And then my second or last piece is, I realize you're sitting in front of a computer, maybe a tablet, and that is a Pandora's box of distractions. So I would encourage you to turn on your camera, stay active in the discussion, because we're quite positive you'll get more out of it the more you put into it. So those are my housekeeping items. As a way of kind of introduction, as Neela had mentioned, I'm Michaela Rosard. I will be serving as the moderator. I am the head of platform at Groov Capital. I work on investor relations and investor engagement. My background is equal parts entrepreneur ecosystem as well as finance. I started out working at 2 different innovation incubators, including Department of Homeland Security's Center of Innovation. And then I pivoted into more heavy finance, capital stack structuring, and raising money for US companies. I've raised $138 million for Minnesota and North Dakota companies. So I am no stranger to the discussion around challenges and ultimately the importance of early stage investing. So with that, I'm going to pass it over to our panelists for them to provide a quick introduction of who they are and their insights that they will be bringing to the discussion today. Why don't we start, David, if you can start us off with intros and we'll go from there.
Hi, everybody. I'm David Herbert. I'm here in my role as chair of the Southeastern Minnesota Capital Fund, which is a fund in Rochester, Minnesota. We started in 2017. We have 56 investors that pooled together $2 million, and we invest that into startups in an angel capital sort of way, but we're a syndicated fund. So everybody puts their money in, we find good investments and put in about $100,000 per investment. I spent most of my career at Mayo Clinic in a variety of business leadership roles with a focus on launching startups based on Mayo Clinic technology or collaborations. So happy to meet everybody.
Perfect. Michelle, would you like to give us a background?
Sure. Hello, everybody. My name is Michelle Landsverk. I'm president of Landsverk and Associates. I've owned and operated my consulting business since 2005. During that time, I've been really active in economic development and entrepreneurship in the northwest part of the state. And as part of that, seeing the importance to entrepreneurship, I led the formation of Pine to Prairie Angel Fund. That was formed in 2008. It's a long time ago. But I have served as chairwoman of the fund throughout its existence. We are fully invested. We have 10 members. It's a relatively small fund. And in total, we've invested in 10 deals. In October of 2019, I helped to launch Two Rivers Angel Network, which is a group of independent angel investors, as opposed to Pine to Prairie Angel Fund, where we had pooled funds. The Two Rivers Angel Network is simply a network of individual investors. So in addition to leading these two angel groups, I was instrumental in the design of the idea competition and acted as coordinator of that from 2008 to 2016. Currently, I work with economic development in Thief River Falls and Fosston, Minnesota, and both really see the importance of entrepreneurship as a real cornerstone of the local economy. And certainly angel investment is an important part of that.
It certainly is. Reed, would you mind going next?
To Michaela, thank you. I'm Reed Robinson. I am the founder and partner of Groov Capital. Groov Capital is a new entrant into the capital landscape in Minnesota. Our differentiation is we're trying to go early in high volume, first institutional investment, industry agnostic in entrepreneurs in Minnesota. It's currently a little over a $6 million fund. And we've been deploying capital since February. We've already committed funds to 12 companies in that amount of time. So we are actively investing in great teams with great opportunities in markets that make sense to build in Minnesota. So thankfully, we've got a great business ecosystem and the luxury of having many industries that we excel in. We want to be investing in those same companies. So happy to be a part of that. Groov is also not just a fund, but also an angel group. So when we make an investment from the fund, we extend the opportunity to invest to our angels to co-invest, which is a pretty interesting format that we're finding to be a really nice way to not just engage capital, but also the expertise and mentorship networks and resources of the 100 LPs in the fund as well. So really excited to be here, excited to be part of this conversation.
Hello, everyone. My name is Mark Poss. I live down in Red Wing, Minnesota, more of a rural area. I'm probably a relative newcomer compared to some of the other folks in this space. I've been an angel investor for 3 years. I started out as a member of a local fund called the Golden Triangle. We have about 20 members and probably a $500,000 fund. And I've really enjoyed the experience so much that just recently I joined probably the oldest angel fund in Minnesota. I'm not sure if that's a fact, but the Gopher Angels, which is a Twin Cities based group of about 80 members, just to get exposure to different ideas, different thinking, different approaches to investing. So all of these experiences have been great. They both have a local focus in a sense. Golden Triangle really tries to focus on Southeast Minnesota, which we don't get the deal flow locally that we had hoped, but it's there. And the Gopher Angels is more of a metro statewide group. So glad to be here. Thanks.
Perfect. And Ryan, will you bring it home?
Hi, everybody. Ryan Weber in St. Cloud, one of 3 partners at Great North Ventures. We're a fund and studio. We're most active in the upper Midwest. We started the fund in the fall of 2017. Our debut seed fund was 23.7 million. And we consider ourselves Minnesota first. Most of our, we made more than half our, usually in rounds that size under $2 million. Using our second fund, it's going to be a larger fund, same stage. But in addition to the fund, we're announced that we currently have 2 companies we're incubating. One of them I'm fundraising for at the moment with the management team. Prior to the fund, angel investor, where we made 25 angel investments that yielded IRR as an angel member of Gopher Angels during that time. But also previously, while angel investing, I was co-founded a company with my brother Rob that we bootstrapped 170 employees in digital media and advertising. So excited to be here and looking forward to the panel.
Awesome. Well, we're certainly excited to have us to share your insight and wisdom. Let's get the conversation kicked off first by broad level what exactly angel investing is. And for the panelists, I will direct some of these questions to individuals, but we do want this to be a dialogue, so feel free to jump in and elaborate. So David, why don't you start us off in discussing kind of at a high level, what is angel investing?
You bet. I think refers to very early stage investing where a entrepreneur or company's going out seeking initial funds. Oftentimes they'll go out to what they call friends and family, and they're not ready to go into more institutional investing, larger venture capital investing. Some of the venture funds are getting so big, they'll only do deals where they can put $10 million in. So the size of the round tends to be in the sub $1 million, maybe 5 million range. But it's further upstream, higher risk, but higher reward. And there's a lot of great people involved, as you can see. The networking is incredible. And there's actually a lot of statistics that show it can be a very lucrative niche. It's not that we're all stupid angels going after this unserved niche and the market hasn't. They're just moving bigger amounts of money. So this is an opportunity zone for those of us that are ready to go after it.
Certainly. So how do you see angel investing fitting into a broader investment strategy? And also, how does that differ from other kind of alternative investments, if you will? Reed, do you want to maybe add in to this question?
I'd be happy to, and I've actually been finding myself in this conversation very frequently with investors that are participating in Groov, whether that's from the angel or an LP perspective. And the common conversation and where a lot of them start is like, first, let's make sure you have other financial boxes checked. This is high risk capital, like David just mentioned. It's the thing that you take in your pocket to the casino that you're willing to lose. Not that that's the outcome that always occurs, but it's a portion of your risk portfolio that's going to be on the riskier side for most people. And some people never actually make it to this level of investing in portfolio strategy. But when they do, the motivation really kind of comes down to it's a totally different asset. It's something that can be experiential. It's something that you can have an active role in the success of. You can become a competitive advantage for your investment and asset. It's something that you can have a coffee with. And so by nature of the differences in this type of asset versus a mutual fund or a real estate investment, I think it has some very unique and exciting things that appeal to people who are capable of the risk, but also like looking to continue to self-actualize, learn, and grow with, and be kind of actively involved in. That's a big part of the motivation. The second bucket of motivation that we have a lot within Groov is like, listen, I want to make sure if I'm going to be investing and taking these risks that I'm doing that in entrepreneurs that are down the street from me. Like I want to see my community thrive. And I love that we've got, representation in different parts of Minnesota. It just exists in the Twin Cities and it exists in other pockets. But the point is, you want to see economic development continue to raise communities up. Probably everyone on this panelist would agree that one of the most effective ways in doing that is by empowering entrepreneurs to create businesses who create jobs. And if you want to see your community thrive, I would argue there's no better investment you can make.
I love that. I feel like something you could grab a coffee with is a great quote, and certainly does help, put a image in people's mind as to how this is different. For the other panelists, would anyone like to elaborate on how you see early stage investing differing from other types of investments?
Sure. I'll jump in. I echo everything that Reed said. I don't recall him specifically talking about the time horizon. When you get into angel investing, you have to look at this as a long-term play. Typically 5 to 7 years, possibly from the time you make your investment to the time that you'd be able to get a return. Now that can vary dramatically, but again, it's not like a mutual fund where if you need the cash, you can just sell out. You're committing to this company through their development stages. So you really have to have that kind of vision and timeline in mind.
Another thing, Michaela, is angel investments are not liquid. So you need to understand that your capital is going to be tied up once you make that investment. The stock you receive is unregistered stock issued via an SEC exemption. So as such, it cannot be sold, even if there was a ready market for it, which there is not. So your money will be tied up until such a time as the company has an exit. So that's just something you need to be aware of. If you need your assets to be more liquid, this is not the place to put them.
I think that's important to remember. So you have properly pointed out it's a higher risk investment. It does require a longer time. It's illiquid. So if someone's interested in angel investing, understanding that this is an alternative investment, if you will, how would one go about evaluating companies at this earlier stage? Ryan, would you start us off with that?
Yeah, sorry about that. So my background was as a company bootstrap where I led product management, and I think there's really two types of entrepreneurs: people that are solving their own itch, like they found a market problem and they're trying to solve it. Like they're professional innovators that have learned a disciplined approach to space and developing a solution, pre-selling it. But I think when you look at it in either case, there are milestones that are kind of expected to be cleared as a company is maturing. And so as angel investors, the valuation also goes up as milestones are improved. So typically we look at, in the criteria we're usually evaluating, is this team the right team to build? And especially in the near term, can they get to the next milestone? Because we can, especially in the early stages, you can really shape the team by helping connect them to other talent and so forth. But is this the right team to bet on? Is this the right market? Usually venture capitalers, in Minnesota, we have a lower cost of operating than a lot of other regions. And so typically our $100 million exits are like unicorn exits or $1 billion exits. We can look for a little bit, sometimes smaller market opportunities, not to say we shouldn't look for the big market opportunities, but that's usually something you can diligence, and the founders should have research in the earliest stages, right? And then traction or how far are they at in validating their assumptions about, creating value and then monetizing it. So even before you launch, you can test these things using, research methods. And so, like I said, some people are very good about, applying those research methods, and other entrepreneurs just kind of through their hustle, you can kind of sense it. They're selling to customers. There's a lot of pent up demand for their product even before they launched it. And so you want to see those signs. And I think the valuations, again, those are a lot of the key markers. Strategy too, I think, especially for digital native products, there's certain, as the industry becomes digitized, there's certain types of businesses that have more potential for defensibility. And so there's books published now on like Platform Revolution and so forth that talk about, that have studied, some of the business models for digital native products and that have been most successful, that have returned the greatest capital, that have the greatest defensibility. So these are the things that we typically look at. And then they're again, based on the stage, there's different kind of clearing of milestones expected.
Mm-hmm. I want to try something. Let's do a rapid kind of around the robin style. If all of the panelists, like the one thing that you would bet on more than anything else, can you share with the audience? So relatively rapid style, even if it's repetitive, still I want to hear what everyone's go-to thing is. Michelle, would you be able to start us off?
It's hard to be fast, but I'll try. The most critical factor is the entrepreneur founder that's leading the company. There are no shortage of good ideas. Do not fall in love with the technology or an idea. It's so easy to do. Look at the founder, the entrepreneur leading, because if it's going to fail, it's probably going to be because of lack of execution on the part of that leader.
Reed, what would you say yours is?
Substance, and that embodies many different things. But is this real? Can you do what you say you will do, and repeatably and dependably execute on the plan? If it's okay to interject a thought from the previous thing, from the previous question here, I know I'm breaking the rules, Michaela, my apologies. But what I think is so interesting about this, I started with like, what's different about this asset comparatively to other investments? And what we're talking about right now is actually what makes it similar to everything else that we're already familiar with. We are looking and evaluating businesses just like you would a stock, or just like you would any other asset. We're just looking at different data points that aren't necessarily available in other markets. So I think one of the interesting ways to bring people into investing in this space is leaning into the fact of like, hey, you already do this. Like, you're already familiar with these companies. They just happen to be much bigger, but why do you think they have a competitive advantage? Why do you think this market is more exciting? Why do you think this team or this leadership, this management is capable of beating the competition? We ask those exact same questions, just at a scale that's much, much earlier and with a lot different and much less information. But to answer your question, substance.
Okay, team, substance. David, what would you add to that?
Well, I think those are all good. I'd say entrepreneur, but I'd add two other things. One, that it's solving an unmet need if possible, and that there is significant growth. Going back to point number one, lots of these will fail. So if Southeast Minnesota Capital Fund's going to invest in 20 deals at 100,000, we are assuming that probably 10 of them will utterly fail. That means the ones that make it have to deliver a return to cover that loss of $1 million on the failures. So we want to see high growth potential, 2, 3, 5x or more. They may not hit it, but we don't want to come out and say this is going to generate 10% upside. That doesn't cover the failure part of the basket.
Mark and Ryan?
Yeah, I'd echo everything everybody else said. I think I typically bet on the team if they have the passion and the drive. But just as important as that is I look for leaders that are open to feedback, because not everyone has it figured out of the chute. And a lot of times you have to pivot, and some people just don't have that in their DNA. So I look to people that you know have the passion but want to drive through those challenges and want the feedback to make it work.
I was just going to say speed. I think that it kind of encompasses, the strategy and because in the end, for startups that these are usually you're going to face competition, and so your ability in the early stages to iterate quickly to find the right business model to scale is really important. And it's but at a certain point you have to be able to scale up, and that's more of an execution or a traditional management. And so you need a team though that can execute through those stages, and they also have to kind of know what they don't know. And I think a lot of entrepreneurs are very you need them to be confident, but you need them to be open, because nobody really not a lot of entrepreneurs, especially first-time entrepreneurs, know how to do this. And so as long as they have a network, around them, I think they can figure out how to continue that speed at the different stages of execution.
Perfect. I want to pivot the conversation a little into the impact that early stage investing has both on the startups and the community. Let's first kind of take a look at the impact on the startups themselves. So with that, Reed, would you share some of your insight that you've seen early stage investing having on those startups?
Well, in the right companies that have the right plan, I'm just going to answer this with a venture hat on. The reason that they're approaching a group like Groov or Great North Ventures or any of the angel funds is because they're looking to go faster. They've discovered in most cases an ability to recognize an opportunity, and they see impending competition or maybe changes in the market that they're anticipating, and they need to go fast. So one thing that we can do with capital is to accelerate those plans. And typically, that is going to be put towards developing a product further, developing a team by adding capacity, or putting it into marketing or sales functions that are going to help attract awareness to whatever solution has been created. So, capital has the means to accelerate. That's one value that we can have. That's very tangible. But back to the having a coffee conversation, there's a lot of intangibles too. Being an entrepreneur is lonely. And a lot of them don't necessarily have people that they can talk to and vent with. So in the right scenarios, one of the most important things that we can be to these entrepreneurs is just somebody to listen and support through the process. And then just connectivity probably would be a third point too of, what's beautiful about the state and the way that we interact with each other in most cases is like we're always happy to help in make an introduction, and you'd be amazed at how a critical piece that might unlock the success of a company is legitimately just like your neighbor, or somebody you knew from high school or went to college with or whatever it might be. And just by having nature of a conversation of exploring, hey, how can I help you? You've now made this connection that like unlocks this barrier to this team's success. And I've seen that so many times.
Perfect. David, I think you had something to add.
Yeah, I was trying to recalibrate. That was, I think, on the last one. But I can talk about the impact on the community, and I think it's significant. And keying off what Reed said, one of the things I found with our venture or our capital fund is just the networking it has created, not only with our entrepreneurs, but amongst the angel groups. And it's been wonderful to meet all these people that have been active in Rochester. Many of them we already knew, but other ones you didn't know at all. And they come from amazing backgrounds. And then to deploy that energy and sort of collective experience toward helping these companies, I think it just makes the community more connected, not only at the investor level, but across to these companies. And it's really fun to watch them grow and thrive, or to help them when they don't. So it's been good. And I guess the other thing was around the pandemic. I think that was a question that had been raised. We found with our companies that they just kept right on charging. In a way, it was a testament to them as entrepreneurs. We paused our investing as a fund, thinking, is the world going to come to an end? And what got us back investing a couple months later was our companies were still out raising money in secondary rounds, and there was money out there being brought to bear. So the industry is alive and well.
Ryan, I know you have done some pretty interesting research as it relates to the impact on the broader community. Would you like to share any of that?
Sure. Some of the data that we've seen, I'll talk kind of macro and a little bit about our fund, so far. But 0.2% of U.S. GDP is venture capital dollars being deployed. Only 0.2%, but 21% of the U.S. GDP is produced by venture-backed companies. And so we're seeing an acceleration in the digitization of industries. And so these tech startups are having the venture-backed tech startups are having a significant impact to industry. And so when you look at a lot of the industries, we have a very diverse set of industries across Minnesota. And when you look at, the Midwest in general, we've got some juggernauts, in a lot of these industries. And so I think leveraging that expertise, I think, that we have in the region and that diversity is an opportunity for the startup and entrepreneurs, to exploit, to be honest. And when you look at, in terms of these startups, they sometimes take a little while to get going. Google it took 10 years for Google to get to 2,000 employees, but after 20 years, they were at 200,000. And so we've seen the same thing in our portfolio as an early stage venture fund, often leading the first institutional investments in these smaller rounds, along with angels. We've seen in our fund, our first 16 million deployed attracted 150 million in additional capital. And the jobs already, just 3 years in, there's already 500 jobs employed. The average amount of investment capital in the early rounds, it was $17,600 per job created. So a lot of economic stimulus, such as you may have read about the Foxconn deal in Wisconsin, but I read kind of nationally that typically they're paying $50,000 to get to attract, like a skilled, attractive job to a city. Well, I really believe, I think Reed commented earlier, it's not an apples to apples comparison, but I really believe investing in the right entrepreneurs is a cheaper way to grow the economy. But of course, if we do it, we're hoping to make a profit from this. We're not doing it from the impact, but there's this double impact of investing in venture and in startups in general. So those are a few of the data points I just was kind of study.
Perfect. Yeah, it is interesting and exciting to see kind of that impact that these companies have. I know one thing that, speaking with all of you was really important is to share some of those success stories. It can be really easy to leave individuals with the impression that angel investing is very scary, maybe not for you. But I do think it's important that we also celebrate and share kind of what success looks like, knowing it can mean various different things. Mark, would you like to start or perhaps share in your point of view some successful stories that you've seen?
As I mentioned in my intro, I'm probably the newbie in here. I've only been at it for 3 years, which is a pretty short time. When I talked about the time horizon is typically 5 to 7. But the very first investment we made was in a local entrepreneur right here in Red Wing who came in with a top-notch team, a great idea, but it was a really big idea, and it required a ton of capital, capital that we couldn't deliver, but we helped her and we got her going. And when I talk about the key thing that we invest in, it's that passion, it's that drive, it's that flexibility to pivot. She had that, and she just kept pushing and pushing and pushing. And just recently, in fact, this month, announced that she found a partner who took over 80% of the company, and she had a fantastic, or we had a fantastic exit, and she is going to move forward as a minority partner in that business and help develop it. So we played a role. We felt like it was helpful. I think it was because it ended up well. So that's an example. Another one that just came in is we had a company approach us, again, a great leadership team. They had a product that was fully developed from a design standpoint. They had their IP down, but they were fresh out of money. So they came to us and they were going to use that money to build out their first 1,000 units. They didn't know anything about manufacturing. Well, the network effect came into play here that Reed and others have talked about. Some of the members of our team are experts at manufacturing. And so we didn't even see this coming, but we are going to be manufacturing that product with some of our partners right here in Red Wing. They're going to take an equity stake in the business. We're going to help fund the rest of that, at least the first phase that they need. So another success. And you really can't architect these things out. They happen just by being in the space. The opportunities come. So that's just a couple examples from down here.
Perfect. I want to open it up to the whole panel if you'd like to share. I know everyone's kind of got various different viewpoints into different parts of the state, so I think this could be interesting.
Well, I'll go next. Pine to Prairie Angel Fund invested in a company in Bemidji. We did the due diligence on this company, and we dug in, and we decided to make an investment. We invested a sizable amount for the size of our fund, but the company is profitable. They have, I'm not sure, I think around 20 to 30 employees. They have a ton of patents, maybe close to 30 patents. They're very innovative, and the future really looks great for this company. We're very proud of them, and we're really proud of that investment. It's the type of one we wish we had more of. When we started, we were hoping for local, regional investments. We did not get as many of those as we would have liked. This is one of only 2 out of our 10 investments that were within the region. But this is the one. We know the founder, we know the CFO. It's the one we can, go have a cup of coffee with. We can stop in anytime and walk through their facility. So we love this investment. We are still holding shares in the company, but we are looking forward to an exit sometime in the future. We're not sure when that's going to be, but hopefully sometime in the next 2 to 3 years.
Oh, David, you are on mute.
A company we invest in is called Viriad. They are engineering viruses to kill cancer. And it's far and away the largest valuation company that we've invested in, which if somebody had told me about it at arm's length, I'd say, oh, well, we're not going to come into a company valued at over $40 million. We just don't play in that zone. But there's an opportunity for us to come in. And as an investor, it was, okay, what's the likelihood the value that we came in at will increase 3 to 5 to 10 times? And this company has gone forward. They've occupied now a 40,000 square foot space in one of the former IBM buildings on the north side of Rochester, have about 50 employees. They're charging down the road. They've signed a collaboration agreement with Regeneron, which is one of the big players in antibodies around COVID. But Regeneron's excited about the technology they have and is funding almost $50 million of pivotal clinical studies. So that's got everything going for it. Although, again, the sheer size of it I would never have thought that's an angel investment. But I think it's one of the most likely unicorns in our portfolio. We all read about cancer drug companies that get bought for 10 billion. You've never heard of them, and suddenly they're snapped up. I think Viriad could be one of those.
Perfect. Thank you for sharing that. So we're getting close to the end of the time. I do want to carve out some space to talk a little bit about how somebody would go about getting involved in angel investing. So Mark, would you be willing to walk us through maybe how you personally got involved? And then we can go into ways in which others can.
Sure. I think we're each going to have a unique. We have a local enterprise here called Ignite US, and Neela was a part of that early on in the startup. And they started hosting local pitch nights for entrepreneurs to come in. And I was just absolutely intrigued and started attending those every quarter. And we saw that there was an opportunity with these companies come in here to help fund them, to get them off the ground. So that's when the impetus came together to create a local fund. Again, as I mentioned, it wasn't very big, 25 or 20 members. Our committed capital individually was $25,000 over 3 years. So, you know, $8,000 a year, you're in the space, you're starting to get some experience. And that was my roadmap. So, you know, that opened up a lot of doors for other opportunities. As I mentioned, Go for Angels. I'm now participating in some other capital funds in the Twin Cities. So, you know, just get your toe in there and all of a sudden this world will open up to you.
Perfect. Ryan, can you walk us through a little bit what it looks like and the differences between perhaps somebody going out building their own portfolio themselves, being part of an angel network, or being part of a fund, and how that might differ?
Yeah, I think, you know, with the angel groups, you know, so for, what's the fund in sourcing or investing individually or as a group? So I think for the funds, you know, you're buying into their strategy. And so you're going to get an allocation to all of the companies they invest in. I think for early stage funds like ours, we're very much trying to activate our LP base to, a lot of them are business owners, and they're interested in learning about, you know, tech and learning about new industries or their industry, what's happening in it. And so we have that we do have that relationship. And so that's similar, but there are co-investment opportunities. Most venture funds do put out pretty detailed quarterly reporting. But they do carry a lot of weight. You know, a venture fund does do typically a lot of due diligence. And so we're typically putting 50 to 100 hours of work into diligencing an opportunity. And so a lot of it, so versus as an angel investor, and I was doing this before the fund, you know, now we have all these startup accelerators, these groups and other funds where you can source deal flow. But you can you can typically, there's a lot of opportunities, I think, now in the state. You don't even have to leave the state to find opportunities in almost any sector. But I think if you want to build a portfolio of 10 or 20 investments, as most angels do, it may be difficult to do that in a single sector, unless it's broad, like you were saying, enterprise, like horizontal type solutions. So I think with angel investing, that's one of the challenges is, I think for entrepreneurs, if you can imagine a fundraise process, let's say you're trying to raise $1 million round as an entrepreneur, if you're going to individual angels and raising it 10K at a time, could be a real challenge. And so I think the angel groups, especially the last, the bigger, a lot in the state have really advanced to they share the diligence. And so that it's not one person's burden to complete the due diligence, it's the group, and they're actually making it easier for entrepreneurs, to get through them. So I think these and the accelerators, including beta that Reed, started, some of them are free, some of them are paid, but getting access to deal flow and hearing a prepared pitch can go a long ways to that efficiency of constructing a portfolio and so forth. But I think depending on how much you invest and how much time you want to put into it, I think would impact for me a lot about what types of investments I'd want to get into.
I think the core kind of spectrum that you have to assess for yourself if you're considering early stage investing is the time and the risk profile that you're looking for. Like on one end, if you are going to go it alone and do your own independent angel investing, that's going to be higher risk and higher time. Because you have to do the sourcing, you've got to do the diligence, the 50 hours to 100 that Ryan mentioned in these deals. Like you can choose to do that or you can not, in which case your risk is going to increase. Or you can completely offload that to a fund where you still kind of get access to a lot of the benefits of early stage deals. They're creating a portfolio. The risk by being as part of portfolio in a process is going to go down. The fees on the management side go up. And then somewhere in the middle, you kind of have like either small groups or larger groups that have, some sort of balance of the two. Like Groov Capital is a nice middle point where if you want to be active, you can be active. If you want to be passive, you can be passive. And what we're seeing is, this kind of ebbs and flows, and that makes sense with people's lives that, right now is a busy time for me. I might kind of dial it back and let the money go to work, or I'm just coming off something and I've got this time to really dig in and I want to spend time, being a part of diligence or portfolio support. And so you get a chance to opt in. So, wherever you find yourself on the spectrum, I think that's an important question to ask yourself. How do I want to be balancing that? Now, the cautionary part of it is like, don't spend too much time in that decision making. Like the hardest thing about getting involved in this is just taking the first step. So at the end of the day, just try something and figure out if it works for you and adjust from there. And I think that's what we're all trying to see. And part of the motivation for this conversation is, how do we get people aware of this stuff to exist in the first place? And then whatever their profile is for what they're looking for, guide them to the thing that makes most sense for their motivations, their time, their capital, et cetera.
Mila, I know you were monitoring the chat for us on the live stream. I'm happy to keep going, but do you want to just let me know if there's any questions coming in on the chat?
There are not any questions at this point.
Perfect.
We encourage anyone to add their questions in the chat.
Certainly. Feel free just to pipe in if you do get any. The ones on the team I'll watch for. So we have a question coming in from Matt. What are the best ways to get further in touch with each of you and learn more to connect about you and your organizations? So we will actually be sending all of the participants a follow-up email, and we will have contact information for all of our panelists. We did get their permission. So yes, we will make sure you have that information. I would be curious to know if the panel has any advice that they would give someone who's looking at getting started in angel investing. David.
What I've experienced coming from Southeast Minnesota Capital Fund is just how open the various angel groups are. We know how difficult it is. So, we were talking before about what's one of the most important things. I wouldn't say it's number one, but if a company's been vetted well by Gopher Angels or Mark's group, that's huge. It saves us a lot of work. It doesn't mean we just sign up right then and there, but you come in knowing, hey, others liked it. And usually companies are looking for where else can I go to raise money? So there's this network. I'd encourage you to go out and tap those networks. Neela's team can direct you to people in your region generally, and that's been invaluable. And then, like Mark was saying, sit in on some of the presentations, whether it's a really ground floor thing like Ignite, or I'm sure you could probably come in as a guest for some of the angel funds, see what it's like and say, this is cool, or whoa, I need to think about it. But all of our investors really enjoy it, and everyone I've met is willing to share. People aren't hoarding deals that I've experienced.
I agree with David. Get involved, talk to other angels, get into an angel group, whether it's a fund or a network. It's a great way to learn. I also think it's an Angel Capital Association. They have membership options for groups and for individuals. There are tons of resources there through the Angel Capital Association. So you can learn about all facets of angel investing. You can become an expert just about through that. And I would also add, this is a little bit of a side topic, but I'm in a very rural part of the state, very rural. And for us, this is an economic development tool. That's the reason I led the formation of Pine Prairie Angel Fund, and now just end of 2019 started Two Rivers Entrepreneur Connection. And I'm guessing there may be some others on this call that are involved with economic development, maybe wondering, how would angel capital fit in here? I think it's something to really look at. It may be a good economic development tool for your community, for your area, and it isn't something that is that difficult to do. It can be done. You can learn how to do it, and there are resources and people that can help you.
Any other advice for someone getting started?
I was just going to add a little bit. I was thinking back to when I was first starting angel investing, and I think patience is one thing too. I think I love the idea of getting engaged, like just participating in some of these, communities and networks is really important. But we only started off investing in 2 companies a year, but 11 years later, our investments, and you see the markers on your when you get the updates, and so your appetite will grow for this, but you don't need to rush into it and make 20 investments. Most investors are tracking multiple opportunities. And Mark Suster, I'm stealing a line from famous angel investor, but you're tracking these, and a lot of times the fundraise process, they like to create FOMO, like they're going to try to get you to pull the trigger and make that investment, but be patient. If you don't feel good about it, don't do the investment. And if you feel good about it, and it's going to be a while before you see the economic benefits. It took on average to exit a angel investment for our 11-year pre-fund track record. So you got to be patient to realize the gains. And do you think that there's something of substance? And don't, if you expect to win on every deal, you're going to be very, very upset and frustrated. But you'll have a couple of the winners will pay for the losers if you do it right, and if you don't do it right, process, and you learned a lot, about a lot of new technology and new businesses, and help support your community. But I think this can be very lucrative. But I think if you go into it, if that's the only motivation, and you try to rush it, you're going to be you're not going to be satisfied.
So we have a couple questions coming into the chat, kind of regarding how angel investing fits into the broader kind of ecosystem, if you will. One is asking, is angel investing only relevant to startups, or is there a play for funding larger community projects? Would someone like to take a stab at answering that?
I'd be happy to. So in the first couple of years of the fund, we were teaching classes on like lean startups and agile, and most of the participants weren't actually like venture backable. It's in small businesses, and I think a lot of the techniques for entrepreneurship can be applied whether it's at a nonprofit or a for-profit. And I think if they do it right, you probably have more predictable, market conditions when you're launching a small business than when you're trying to launch a global business. And so I do think that for angel investors, I think it's totally a lot of the norms, I think, of operating and building a business and growing it can be applied, and they'll actually increase their success rate. So I'm a big believer in just entrepreneurship in general. And I know several angel investors, I should say at least, that are investing in small businesses, and they're doing just fine, doing that. In fact, it probably has a greater, there might even be you can make an argument that that's going to have there's more of those opportunities, and maybe they're making a even greater community impact because there's so many of them.
Kathy and Lindsay are asking somewhat similar questions. So they are interested in understanding how a person might be able to start angel investing, even if they are not a accredited investor or qualified investor. Is there a pathway for them? And if so, what does that look like?
Increasingly, yes. With a lot of the kind of distributed networks like a Republic or a WeFunder, or I think Minvest may have been mentioned here. Those are all, if you're familiar with a Kickstarter or other crowdfunding resource, like it's the exact same thing. Paying for a product, you're buying equity. And so changes in regulation made it possible for non-accredited investors to do that using those platforms. And I would say, kind of back to the like, how do you take your first step? Those websites are great kind of training grounds. How do I get exposed to deals? Like, what is an early stage deal? It is. You can put $100 into an investment in some cases, and now like automatically you're an angel investor and you can get excited about supporting this deal. There's other questions around like, okay, well, what can you expect to that? Like the same laws of startups apply. It's still a 5 to 20 year hold if it's actually successful. You might get $150 back. So the risk return profile is totally different. But if you want to get exposed to, that type of activity, it's a good place to do it before you're feeling comfortable to put, larger capital to work.
Acknowledge we are coming to the end of our time together. I do want to say, let this be the start of the conversation, not the end of it. So engage with both the panelists, myself, Neela, and her team. We will be sending a follow-up email with some additional resources and contact information. But thank you so much for taking time out of your day to be here. And thank you to all of our panelists to provide their insights and thoughts. This has been really great to kind of start the conversation, and there's numerous ways to get engaged, so don't be a stranger.
Thank you. That was awesome.
Thanks, everyone.
Thanks for hosting.
Yes,
Thanks,
thank you
everyone.
to Capital. Thank you to all the organizations part of Launch Minnesota that helped host this event. Hope everyone learned something new, and there are people here to help you in taking the next step. So thank you, Michaela, very much for a great discussion.